Employment contract under the labor law.
Employment contracts. Last week, we talked about personal income tax computation. We talked about income subjected to capital personal income tax. We differentiate resident individual and non-resident individual. We list out the taxpayers that are subjected to personal income tax. We
Yes,
differentiate
sir.
what is due. We mentioned the issue of dual resident. We also talk about basis of assessment of personal income tax. We talk about how we compute personal income tax. We talk about benefit in kind. So we discuss contract of employment and contract for employment. We have also mentioned the difference between contract of employment and contract for employment. Have we not?
Yes, we have, sir.
Okay. Now, what are those income exempted from personal income tax? What are those income exempted from personal income tax? Number one income exempted from personal income tax. Benefit in kind. All benefit in kind exempted from tax, like provision of meal, provision of uniform, lunch voucher, relocation allowance. They are also exempted. Since they are not benefit in kind subjected to tax, that means they are exempted from personal income tax. Reimbursable expenses incurred by employee. When an employee is given a reimbursable expenses for those expenses incurred by him or her, such expenses are not subjected to personal income tax. Compensation for loss of office. An employment contract was terminated. That employee is given compensation for the loss of that office. That compensation is not subjected to capital personal income tax. Rather, it will be subjected to capital gain tax. Medical and dental expenses too, they are not subjected to capital gain personal income tax. Gratuity. When you are paying a gratuity, such gratuity are tax exempted. They are not subjected to capital gain personal income tax. They are not subjected to personal income tax. Dividend received from investment. You receive a dividend from investment. Such kind of dividend from capital personal income tax. Such kind of investment is exempted from personal income tax. Dividend received from shares. All such investment in shares, when you collect dividend, they are treated as frank investment income. That means they are subjected to tax at source. So they will not subjected to tax in the hand of the taxpayer. Tax will have been deducted at source. Interest on government security. Interest received from federal government security. When individual or employee or sole proprietorship receiving interest from federal government security, such interests are exempted from personal income tax. You will not pay personal income tax. You will not pay tax on it. Interest from foreign domiciliary accounts. Interest from foreign domiciliary accounts, they are exempted from personal income tax. Profit on sale of fixed assets. Profit on sale of fixed assets. They are exempted from personal income tax. Profit on sale of fixed assets. They are also exempted from personal income tax. Those are the income exempted from personal income tax. Now, let's go to the format on how we compute personal income tax. Let's go to the format. Under the format for computing personal income tax, you are going to divide your income into how many? Under the format for computing personal income tax, your income is going to be divided into how many?
2.
What are the two?
Earned income and unearned income.
Earned income and what?
Unearned income.
Unearned income. In the case of earned income too can be subdivided into how many? 2. Earned income too can be divided into 2. Employment income and what?
Trading income.
Trading income. For the employment income, they are assessed to tax on what basis? For the employment income, they are assessed to tax on what basis? Actual year basis. I mentioned that last week. Employment income, what are the examples of employment income? Basic salary, housing allowance, transport allowance, benefit in kind, utility allowance. They are assessed to tax on what basis?
Actual year basis.
Actual year basis. Why trading income? They are the income from the profit or professional fee or part-time income. They are assessed to tax on what basis?
Preceding year basis.
Preceding year basis. Please, this area I mentioned, they are the main area in personal income tax. You need to know this income, what type of basis are we going to assess it to tax? Is it on actual year basis or is it on preceding year basis? Do we understand? Do we understand? Now, we have talked about earned income. Unearned income is assessed to tax on what basis?
Preceding year basis.
Unearned income is assessed to tax on preceding year basis. And this unearned income, they are subjected to a tax at source. That tax is called what?
Withholding tax.
Withholding tax. Example of unearned income: rent gross, interest gross, royalty gross, dividend gross. However, your earned income plus unearned income is going to give you what?
Total income.
Total income. When you plus earned income together plus unearned income, it will give you what?
Total income.
Total income. From your total income, you less frank investment income. You less what? Frank investment income from your total income. You less frank investment income. Frank investment income, they are dividend. This dividend that we use under unearned income, we are still going to less it again after we get total income. We are still going to less the dividend because dividend is non-taxable. The dividend we use under the unearned income, this dividend gross that we use under the unearned income, we are still going to come and less it again. These dividends, we still come and less it. When we less this dividend, when we less it from total income, we will get what is called net total income. When we less dividend from total income, we are going to get net total income. Net total income. So, after you get your net total income, you are going to less tax exempt. We are going to less tax exempt from your net total income. What are the tax exempt we have? Under personal income tax, the following are the tax exempt: National Housing Fund contribution, National Health Insurance Scheme, Life Assurance Premium, Pension Contribution, Gratuity. They are the tax exempt. We are going to less them from your net total income. If you less your tax exempt, you are going to get what is called gross income. If you less your tax exempt from your net total income, you are going to get what? Gross income. Example of tax exempt: when you contribute for National Housing Fund for your staff, that contribution that you deduct from the staff salary for National Housing Fund is a tax exempt. The staff will use it to reduce his or her tax. HMO, National Health Insurance Scheme, that deduction from your salary for National Health Insurance Scheme is a tax exempt. You are going to use it to reduce your tax. Life Assurance Premium, you insure the life of your staff. That premium that you pay is a tax exempt. You are going to use it to reduce your tax. Pension contribution, you contribute pension every month to the PFA for your staff. You deduct some percentage from your staff salary. I think 8% was deducted from the staff salary. That 8% is a tax exempt. You are going to use it to reduce your tax. Gratuity too. Gratuity that you recommend under any income, you are going to use it as a tax exempt too. When you minus your tax exempt from your net total income, you will get what is called gross income. The question is, how do we get each of the tax exempt. National Housing Fund. How do we calculate National Housing Fund? How do we calculate National Housing Fund? Starting from National Housing Fund. National Housing Fund, if you want to get it, 2.5% of basic salary of your staff will be your National Housing Fund. But in an exam, if they give you the amount of National Housing Fund, you use the amount given to you. But if they do not give you, they just tell you that the company normally pay National Housing Fund for the staff. You are going to use 2.5% of basic salary. Do we understand? Do we understand? Hello?
Hello, sir.
Yes. I can hear you.
You said hello and I replied back.
Do you understand the
Yes, sir.
National Housing Fund?
Yes, sir.
National Housing Fund, according to the law, it is 2.5% of your basic salary. In a year, if your basic salary is 2 million, National Housing Fund contribution that will be deducted from your salary will be 2.5% of it. However, when you are computing personal income tax question, if the examiner give you the amount of National Housing Fund, you don't need to find 2.5% of basic salary. But if the examiner don't give you, and you were told in the question that the company pay National Housing Fund for their staff, you are going to compute your National Housing Fund by using 2.5% of your basic salary. National Health Insurance Scheme, HMO. What is the percentage for that one? National Health Insurance Scheme is 5% of your basic salary as a staff. 5% of your what? Basic salary. In a question, if you are told that the company pay National Health Insurance Scheme, they did not mention the amount, we are going to use 5% of basic salary to get the amount. But if the amount is given to us, we don't need to use the 5%. Life assurance premium. The actual premium paid by the company on behalf of that staff will be the life assurance premium. The actual premium paid by the company on behalf of the staff will be the life assurance premium. National pension contribution. What is the rate? The rate of national pension contribution that we use as a tax exemption is 8% of the basic housing and transport. Eight percent of summation of your basic salary plus transport allowance plus housing allowance. However, while you are computing personal income tax, examiner will give you pension contribution that the company paid to the PFA on behalf of employee. You use the amount given to you. You don't need to find the 8%. But if you are not giving any amount and you are told that the company pay pension to the PFA on behalf of the employee, you are going to use 8% of basic housing and transport allowance. For the gratuity, the amount of gratuity paid by the company to employee will be the tax exemption. So that is that. Let's go back to the format. I said when you minus your tax exempt from your net total income, when you minus your tax exempt from your net total income, what do you get?
Gross income.
Gross income. After you get gross income, the next thing to do after you get gross income, the next thing to do after you get gross income, the next thing to do is to less your consolidated relief allowance. Your what? Consolidated relief allowance from your gross income. Your consolidated relief allowance is to income, chargeable income, or what? Taxable income. When you less your consolidated relief allowance from your gross income, you are going to get your chargeable income or taxable income. Once you get your chargeable income, it is from your chargeable income you now compute tax using the tax table. You are going to use the tax table. However, if your chargeable income is less than 300, that means you are going to pay minimum tax of 1% of your total income. But if your chargeable income is more than 300,000, you are going to apply the tax table. What is the tax table for personal income tax? Who can tell me? Tax table for personal income tax. First 300,000 is going to be at what percentage? At 7%. Second 300,000 is going to be at 11%. Next 500,000. Next 500,000 is going to be at what? 15%. Next 500,000 is going to be at what percentage? 19%. Next 1.6 will be at what percentage? 21%. Above above 3.2 is going to be at what percentage? 24%. You can now compute your tax. It is from your chargeable income. What you have with your chargeable income is what you are going to use to compute your tax table. Anytime your chargeable income is less than 300, what rate are you going to use to compute the tax?
1%.
1% of what?
Minimum tax.
If chargeable income of a company is less than of that taxpayer, that employee, if the chargeable income is less than 300, that employee will pay minimum tax, and the minimum tax rate is 1% of total income. 1% of your total income. 1% of your total income. But if your chargeable income is more than 300, you are going to use a tax table. First 300,000 at 7%, second 300 at 11%. Now, consolidated relief allowance. This consolidated relief allowance, how do we compute it? How do we compute consolidated relief allowance?
Excuse me, sir.
Yes.
Please, can I ask a question?
Yes, sir.
For our exams, because I heard there is a new tax reform, so I want to know if the new tax reform has been in place, or this is still what we are going to use for our exams.
Ladies and gentlemen, in the beginning of my lecture, I talk about the tax reform. If you listen to my lecture, when I did introduction to tax, I told you the tax reform is there to be signed into law. It's not going to be tested for your diet, for this diet. Right now, ICAN have not incorporated tax reform into their syllabus. There is no new pack on tax. The ICAN pack on tax still have this one. They are still deliberating on tax reform. The National Assembly has not passed it into law. So this formula is still in place, ladies.
All right, thank you,
Do you
sir.
understand my point? So how do we compute consolidated relief allowance? CRA. If you want to compute your consolidated relief allowance, you are going to use your consolidated relief allowance will be higher of I'm looking at where did I put the consolidated relief allowance? For you to compute your consolidated relief allowance, your consolidated relief allowance will be higher of 200,000 or 1% of gross income. Your consolidated relief allowance will be what? Higher of what? 200,000 or 1% of gross income plus 20% of gross income plus 20% of gross income. If you want to compute your consolidated relief allowance, it's going to be higher of 1% of gross income or 200,000. Which one is higher among the two? Plus plus what? Plus 20% of gross income. So anyone that is higher among the two is what you are going to take as your consolidated relief allowance. Do we understand? Do we understand? Do we understand? Any question from this area? Any question? Any observation? Any question? Any observation? So in the absence of no question, no observation, we can look at one question from this material. Let's look at question 1. Let's look at question 1. Somebody should help us read the question 1.
Mr. Willie was employed by Zenon Bank Limited as head of banking operations, effective from June 1, 2021. The details of his salary are as follows. Can you scroll up, sir?
Okay. Okay.
Okay, we have the basic salary per annum, 48 million. Housing allowance, 12 million. Transport allowance, 2 million. Utility allowance, 800,000. Meal allowance, 500,000. Leave allowance, 4,800,000. Clothing allowance, 2 million.
Okay.
Can you please scroll, sir? Mr. Willie was provided with official car. The cost of the car is 7,500,000. He was also provided with a driver and a private personal assistant who were paid 300,000 and 500,000 per annum respectively. Prior to joining Zenon Bank Limited, Mr. Willie was on annual salary of 32 million while working with Carbon Bank PLC. He resigned from the bank effective May 31st, 2021. Additional information. Please scroll, sir. Mr. Willie is married with 6 children and all are of school age. He maintains his aged parents who lives with him in Lagos. B. He paid an annual life assurance premium of 3 million. C. His employers deducted and remitted on his behalf the following mandatory deduction of 4,900,000 and 1,166 and 667 for NHF and pension respectively for 2021. D. He paid NHIS premium 350,000 in 2021 to a health service provider to provide medical cover for himself and his family. Required, compute the tax liability of Mr. Willie for the relevant assessment here.
Okay, thank you very much. tax liability of Mr. Willie. For the relevant year of assessment. So, looking at this question, let's look at the income of Mr. Willie. What are the income of Mr. Willie? If you want to solve this question, Mr. Willie is going to pay personal income tax. You write the heading, Mr. Willie is the name, computation of tax liability. For which of the year of assessment? Which year income was given to us? 2021. You understand? Looking at this question, all the income given to us in this question in respect of Mr. Willie is which type of income under personal income tax? Look at all the income of Mr. Willie.
And
which type of income?
Earned income.
Huh?
Earned income.
Under the earned income, which type of income do we count it?
employment income.
Employment income. We are not giving any trading income. Are we giving any trading income here? As per Mr. Willie?
No.
No. That means this employment income will be assessed to tax on what basis?
Actual year basis.
Actual year basis. This income is for 2021. It's going to be assessed to tax in what year?
2021.
That is the reason why, if you look at my solution, I write 2021 year of assessment. Earned income is the heading. Abi, when you are computing your personal income tax, I said you will divide your income into how many? Two. Earned and unearned. In this question of Mr. Willie, there is no unearned income. There is only what? Income. Earned income. And the earned income we have is employment income. Though Mr. Willie work in how many places?
2 places.
New employment and what? Old employment. Presently, he's working with Zenobank. Starting from when?
June 1, 2021.
June 1, 2021. They now give us his detailed salaries he's collecting from this company he's working. But they said all these detailed salary is for how many months? Is it per annum or for 1 month? Is it or per annum?
Per annum.
Every one of them is per annum. And when does Mr. Willie start working with this company?
1st of June 2021.
That means the salary we need is from 1st of June to when?
December 31.
To 31st December. How many months is that?
6 months.
Are you sure?
June, July, September. 7 months.
7 months.
7 months. 7 what?
Months.
Months. This 48 million is going to be do what? It's going to be prorated to how many months?
7 months.
7 months. 7 over 12 times 48 million is going to give you what? 7/12 times 48 million. Help us calculate.
27,999,999 naira.
37 million.
27
Are you sure?
million. 27,999,999
If
naira.
you give you 28 million,
28 million.
if you do it very well, my sister, please try to check down your calculator, my sister. Check your calculator very well. Maybe you have pressed one thing that will be giving wrong answer.
It's the same thing.
28 million.
It's
I did not
28 million.
approximate. That was why. I didn't approximate.
You move to housing allowance from this new employment that is working, that you work for 7 months. Housing allowance too will be prorated. Oh yeah, 7/12 times 12 million.
7 million.
Transport allowance. Seven over 12 times 2 million.
1,166,667.
Can you see it in the solution? You can see that. Utility allowance too. If you use 7/12 times the amount of utility allowance, you will get 4,667. Meal allowance too, you will get 291,667. Leave allowance too, you will get 2,800,000. Clothing allowance too, you will get what? 1,166,667. Those are the income we receive from the new employment. Do you understand? You know, they just give us the income you receive from this new employment. Apart from this income listed above, you receive from this new employment. We are also told that Mr. Willie was provided what?
Official car.
Official car is which type of income? Under your personal income tax.
Benefits in
Benefit
kind.
in kind is part of employment income. Do you understand my point? Official car was benefit in kind. How do we treat official car under benefit in kind?
5%.
What are the treatment of benefit in kind? We can classify benefit in kind into three, Abi. Like I said last week, accommodation is one, Abi.
Yes.
Other assets like motor vehicle or official car, plant and machinery, furniture and fitting. Abi?
Yes.
And the third one is what? Who can tell me the third one?
Provision of domestic and support staff.
Provision of domestic staff or support staff. I mentioned the treatment last week, Abi. In respect of official car, which is other asset, how do we calculate the benefit in kind?
5% of the asset costs.
If it is owned by the employer.
Go back to this question. What is the cost of the official car?
7,500,000.
So 5% of the official car times who give her this official car? Is it the new employment or the old employment?
The new employment.
The new employment, Abi. For this year we are doing, how many months does he work for the new employment?
7 months.
So 5% of the cost of official car times 7 all over what? 12.
Yeah.
Do you understand my point?
Yes, sir. 218,750.
218.
750.
So let me go to the benefit in kind. Under the benefit in kind, you can see under the new employment income, after closing our allowance, I write benefit in kind, official car, Abi. 218 what?
750.
Correct, Abi? You should know how we get this now. 5% of 7.5 million times 7 over 12. He was also giving, apart from official car, he was also giving what?
Domestic.
A driver and a private personal assistant who were paid what?
300,000 and
300,000 for the driver,
500,000.
500,000 for the personal assistant. They are domestic staff. Have you not so?
Yes, sir.
They are the domestic staff. They are part of his benefit in kind. We add it as his income. We write it as benefit in kind domestic staff. But this is per annum. How many months do we need?
7 months.
So we prorate it 7 over 12. We prorate it 7 over 12. So 7 over 12 times 300,000. We will get the benefit in kind for the official, for the driver salary. It's going to give us 175,000. Can you cross check? Is it correct? Seven over 12 times 300,000.
175,000.
For the personal assistant, 7 over 12 times 500,000.
291,667.
So that is how we get that. You can see we prorate the new employment based on the number of months he worked with the new employment. Do you understand our point? Do you
Yes,
understand how we get the one of new employment? All the new employment, he worked there in 7 months. Now, after the new employment, they say proud to joining Zenon Bank Limited, which is the new employment. He was working with which place?
Canon Bank. Kiban Bank.
Kaban Bank, with annual salary of how much?
32 million.
He resigned in Kaban Bank when?
May 31st.
So how many months does he work in Kaban Bank?
5 months. Yeah.
12 months make 1 year. Abi?
Yes, sir.
Since he worked with Zenon Bank for 7 months, that means he's going to work with Carbon Bank for how many months?
5 months.
5 months. Starting from January, February, March, April, and what?
May.
May. So this salary given to us from the Carbon Bank is for 1 year annual salary. Abi?
Yes.
This 32 million is for 1 year. Abi? We are going to prorate it to how many months?
5 months.
5 months. Oh yeah, prorate. Let's see what it gives us.
76,800,000.
Do it very well.
Okay.
Do it very well now.
Okay.
5/12 times 32 million.
13,333,333.
Do you understand now?
Yes, sir.
Now, we have get the annual salary. We don't have on any income. Our total income, since there is no on any income, will be the summation of all this salary from the beginning. We are going to sum everything together. Summation of both new employment salary and old employment salary. Once we sum everything together, what is it going to give us? It's going to give us, the total income is going to give us 54,910,417. So I want to use example. If we sum it, 54,910,417. After your total income, there is no frank investment income. So there is no net total income. It is from your total income you less your tax exempt. You less your tax exempt. So let's go and read the question. How many tax exempt do we have? Additional information. Is married with 6 children. They have 2 late. That one does not concern us. It's of relevance. Is paid annual life insurance premium of how much?
3 million.
3 million. That is one tax exempt. His employers deduct and remit on his behalf the following mandatory deduction. Number one deduction that they deduct is what? National
NHS.
Housing Fund. Abi?
Yes, sir.
They also deduct from his salary, pension. Abi? Those are the 2 deductions that they deduct. Apart from them, he also pay national what?
Health insurance scheme.
Which is 350,000 in 2021 to a health service provider to provide medical cover for himself and his family. So how many tax exempt do we have in this question? Who can mention them?
The life assurance, the
Okay,
National Housing Fund, pension,
okay.
and National Health Insurance Scheme.
So those are the tax exempts we have. We come and less them. We come and less them. We come and less them. Life assurance, 3 million. National Housing Fund, 4.9 million. Pension contribution is how much?
1,166,667.
National Health Insurance Scheme is how much?
350,000.
When you sum 4 of the tax exempt together, when you sum them together, how much are you going to get? You are going to get 9,416,667. When you sum the tax exempt together, you are going to get 9,416,667. Your tax exempt, you are going to less it from where?
Total income.
From your total income. So that you are going to get what? You are going to
Gross
get
income.
gross income. So in this question, our gross income is going to be 45,493,750.
Excuse me, sir, please, can I ask you a question?
Yes, you are free to ask a question.
Okay. When you were explaining NHF and NHIS, you mentioned that is the actual premium that was paid by the company on behalf of the staff. But in this
Yes.
question, it was stated that he paid, not the company paid.
Yeah, if you pay by yourself, it's allowed to.
Okay, all right.
Yeah. It's allowed. From your gross income now, you will now less tax relief. One of the tax relief that we have, the tax relief that we have is called consolidated what? Relief allowance, which is called CRA. Consolidated what?
Relief allowance.
Relief allowance, which is called what?
CRA.
CRA. For the CRA, how do we compute our CRA? Higher of 200,000 or 1% of gross income. Between 200,000 or 1% of gross income, which one is higher? Let me check. Which one is higher? This is gross income. 1% of this, is it higher than 200,000?
It's higher, yes.
Yeah, now.
It's higher than 200,000. 254,337.5.
This is it. 454,937. Abi?
Yes.
That means I'm going to take this. But if it is lesser than 200,000, which one am I going to take?
The 200,000.
200,000. Take note of that. Assuming 1% of gross income is less than 200,000, which one am I going to take? 200,000. Do you understand? Plus 20% of gross income. 20% of gross income is how much?
45.3. $9,098,750.
So that is 20% of gross income. So your consolidated relief allowance will be 1% of gross income plus 20% of gross income. When you sum the two together, you are going to get 9,553,687. You will now minus that from your what? You will minus your CRA from your what?
Gross income.
Gross income. When you minus it, what are you going to get?
Chargeable income.
Or chargeable income.
Chargeable.
You will get chargeable income. You will get what?
Chargeable income.
Chargeable income. Once you get your chargeable income, you can now compute your tax. Can this company pay minimum tax? This taxpayer, Mr. Willie, is he going to pay minimum tax? No, he cannot pay minimum tax. He will pay the normal tax because his chargeable income is higher than what?
300,000.
300,000. Anytime your chargeable income is less than 300,000, you are going to pay minimum tax. What is the rate of minimum tax?
1% of total
income. 1% of what? Total income. Do you understand? Now, first 300,000 at 7% is going to give us what? 21,000. Second 300,000 at 11% is going to give us 33,000. Next 500,000 at 15% will give us what?
75,000.
75,000. Next 500,000 at 19% is going to give us what?
95,000.
Next 1.6 at 21% will give us what?
336,000.
Above 3.2. What is above 3.2? You know, these 300,000, where are we removing it from? Where are we removing them? We are removing them from what?
Chargeable income.
From chargeable income. If we remove 300,000, we remove another 300,000. We remove 500,000. We remove another 500,000. We remove 1.6. How much is it going to remain?
Oh, 85. 34,340,000.
30 what?
34,340,000.
You didn't do it well. Okay. Remove 300,000. Remove another 300. Remove 500. Remove another 500 and remove 1.6.
32,740,062 naira.
32,740,000 0.62. Abi? That one will be at what percentage? It's going to be at what percentage?
24%.
At 24%. That means if we add 300 plus 300 plus 500 plus another 500 plus 1.6 plus 32, it's still going to give you what? It's still going to give you the chargeable income. Do you understand? If you add 300, 500 again, 500, you add 1.6, you now add it with 32,740,062. It's still going to give you your chargeable income, which is 35,940,062. Abi? Do you understand?
Yes, sir, but
Yes, sir.
When you want to get your 32,740,062, you minus 300. You also minus another 300. You minus 500 again. You also minus 500. You now minus 1.6. You will get 32,740,062. You now apply 24%.
okay. I have a quick question, sir. So if we add the 300 and 300 and 500 and 500 and 1.6 million and we subtract it from chargeable income, but it's not up to 3.2 million. So does that mean that we will not apply the 24% rate on the remaining amount?
We apply anything remaining. 3.2 million, this above 3.2 million means if you add 300 plus 300 plus 500 plus 500 plus 1.6, what is it giving us?
3.2.
Above 3.2 means anything more than 10. That summation above, anything more than 300 plus 300 plus 500 plus 500 plus 1.6, anything above them will be applied. We apply what tax rate?
24%.
24%. Even if you add them, if you minus them from chargeable income, if it is 5,000 remaining, you are still going to apply what tax rate?
24%.
24%. The above 3.2 they are referring to the summation of 300 plus 300 plus 500 plus 500 plus 1.6. That is the above 3.2 they are referring to. At the end of the day, your total tax liability, your total personal income tax will be how much?
8,417,615.
That is what we get. 8,417,615. That is your total tax. Any question, any observation, any issue on this? Any question, any observation, any issue? This question only has any income. And the end income this question has is what? Employment income, which is assessed to tax on what? Actual year basis. Ideally, the format for computing personal income tax, you divide your income into how many? 2. Abi?
Yeah.
Earned income and on what?
On earned income.
On earned income. And earned income too can be divided into 2. Employment income and what?
Trading income.
Trading income. Employment income is assessed to tax on actual year basis. While trading income is assessed to tax on what?
Preceding year basis.
So, ladies and gentlemen, because you are having another class by 7 o'clock, this is C50. Let's stop here. By next week, we are going to move to another question on this personal income tax. We are going to solve another question on personal income tax. So by God's grace, by next week, we may finish with personal income tax. If we can't finish next week, it will take us upper week. It is better we know personal income tax very well, because 25% of the mark or 20% of our question in an exam will be based on personal income tax. So it is better, if you have any question, any clarification on personal income tax, please do not hesitate to contact me. My phone number is in our group chat. My name is Idris Tunde. So you can contact me. So we need to spend more time on personal income tax. By God's grace, when we finish personal income tax, we move to trading adjustment profit. So from there, we move to partnership assessment. So thank you for having me.